All right, my friends, thanks for tuning in. Today I'm going to be joined by Will Clemente. A lot of you guys probably already know him from Twitter. Had a great conversation with him, so sit back and enjoy. Cool. So thanks, Will, for coming on. I met you originally quite some time ago, but it's been cool to catch up before doing this call. So thanks for coming on, man. You want to do a little bit of background on when you kind of joined? And I mean, you've had a really uncommon character arc, so I think it'd be interesting to hear some of that story.
Yeah, absolutely. Thanks for having me on, man. I'm a huge fan, obviously, of Twitter, and I've learned a ton from it. And it's been nice to kind of somewhat get to know each other over some like TG back and forth, and catching up over the last 30 minutes before we hit the record button. So appreciate you having me in mind to come on, and it's an honor to be here. Yeah, happy to give 2 seconds on my background. So in high school, didn't really do great, didn't really pay attention in school, kind of was in I would say not the greatest crowd, didn't surround myself with the greatest people. Decided to graduate a year early, just to kind of get out of there and move on, go ahead and get started with college. And so did a couple online classes to get the credits that allowed me to graduate early. So then I went to school at East Carolina University when I was 17. I stayed there for 2 years, studied finance. I switched it around a couple times, but my sophomore year, I got sent home for, everybody got sent home for COVID. And so I started working, 2 jobs. Right before we had gotten sent home, like over winter break, I had done like a overnight stocking job at Michael's, which for anybody not in the States is like this arts and crafts store. And I would come in at like 2 a.m, unload the 18-wheeler that would come in with, all the inventory. It was like me and one other person, packages like falling on my head. I'm like half asleep at 3 a.m. And it just wasn't the most fun thing to do. And so I was like, all right, I'm gonna try and listen to a podcast to at least try to learn something while I'm working. Initially, I would just listen to Rogan, and then I started trying to be a little more productive and try to maybe listen to something that helped me make some money, and started listening to podcasts about the markets. Originally started, kind of Warren Buffett, like was doing like discount cash flow models at my desk. I got like Charlie's Almanac right here, security analysis, intelligent investor, Phil Fisher's in here somewhere, kind of all the like OG, like, corny cliche, like Warren Buffett books I read, and went through them all. There's this great podcast called, The Investors, TIP, The Investors Podcast, or The Investors, it's Preston Pitch's podcast that he originally started as like Warren Buffett investing like 101. If you go all the way back to the beginning, it's like you just like overview like Warren Buffett style like value investing books, and then they'd kind of like break down like individual investors. So I chain listened to that my whole shift there. This was like winter break right before COVID. Then we got sent home for COVID. Then I started working at Target, doing like the in-store shopping stuff, like when you do like a curbside pickup order, and somebody's got to pick the stuff to put it in the cart that then gets brought out. And that was my job. Is I would walk around the store and grab your box of cereal and milk or whatever, and put it in the fridge for the people that took it out to the car. And that became pretty monotonous and pretty mind-numbing, because after a bit you just memorize the whole store. And so started doing the same thing. I just listened to my podcasts and started to learn some stuff. At the same time, obviously I'm starting to become interested in markets. The market's grinding up while the economy hasn't necessarily reflected that. Obviously everybody remembers very vividly the V recovery from COVID. And, I kind of sat there and was like, okay, well, this doesn't really make fundamental sense. And then quickly understood, okay, well, it's all about liquidity. And then started to veer away from kind of the Warren Buffett value investing, which I think works in like a system of like sound money without like moral hazard in the market. But like fundamentally, like if the monetary system is broken, or, functioning differently than like that traditional value investing framework doesn't necessarily work as it maybe should. And so then I started to really cling on to Bitcoin because I kind of realized, like, just the whole PTJ, like fastest horse, as the government's, printing money thesis, and was stacking all my target paychecks, which wasn't a lot of money, into BTC, a little below sub 10K. This was like spring into the summer of 2020. At the same time, I just didn't really have anybody to talk to about this stuff, and so I just created a Twitter account, and was like, all right, I hope I can find some other like internet nerd people that want to talk about this thing, because you at the beginning you go down the whole rabbit hole and get super obsessed with it. And I just started tweeting out my thoughts, and it's kind of just like, at the beginning, just philosophical, like ideological, like why Bitcoin is the greatest thing since sliced bread, and started to get the attention of a couple people. I got a couple thousand followers. Just I was just really active, grinding on Twitter. All day. Not that it was like I was purposely trying to do it. I just was like so sucked into it, and I just was like hungry to meet other people, I suppose. And one night I sat down and I was like, why don't I just write out all my thoughts on why I like Bitcoin? And so I wrote Bitcoin's role in the financial systems, this article on Medium. And, I talk about the whole nine of, debt to GDP and all these things that, we talk about as like part of the Bitcoin thesis today. Especially the monetary response from COVID was so recent at the time, and spent, a decent portion, talking about that in there. It got picked up by a couple people who shouted me out, got a couple thousand more followers. And then I caught the attention of Pomp, and Anthony reached out to me, DM'd me one day during my shift at Target, said, hey, do you want to come on the podcast? I was like, oh my goodness, at the time, because, I obviously like listened to his podcast when I was like, starting to go down the Bitcoin rabbit hole. I went on, I think I recorded the episode like in my parents' closet or something, on my like old high school laptop. And, some people seemed to like it. And so we ended up doing another one, and then it kind of evolved into kind of this weekly thing where I would come on and talk about, the state of Bitcoin and the market. And, at the same time, I kind of became more interested in not just like the long-term thesis for Bitcoin, but also like more granularly, the market on like a shorter to medium-term basis as well. So we would talk about a lot of that stuff. At some point, I started to get some offers, and just didn't really make sense to stay in school, because the university I went to wasn't necessarily like the greatest. It wasn't like a horrible school, but it definitely wasn't like in some astute university or something where I was going to have some like networking advantage or like educational advantage against anybody else. So it was pretty much a no-brainer for me to drop out at the time and at least like give it a shot. Of course, some my parents and other people were like a little, I wouldn't say that they were completely against it, but they were definitely, questioning like, is this really what you want to do? But generally supportive. And then, so I decided to drop out. I went and started this role at this firm called Blockware, and Blockware is basically, or was at the time, I think the business has evolved a bit now, is basically a Bitcoin mining rig like brokerage firm. So they like brokered a fair amount of the rigs that migrated over from China to the US during the Chinese mining migration back in the summer of 21, for example. I basically led what we kind of called Blockware Intelligence, which was like this research arm within the firm. And it was really just me writing a newsletter and doing a podcast. And it was great. I enjoyed my time there, and no complaints, but it was just at some point it was just kind of me, and I had done the whole newsletter thing, grown the podcast, interviewed everybody I wanted to talk to, and kind of got to the point where I was like, all right, like I want to have my own thing. I want to kind of expand my horizons a bit. And so after a year there, stepped down, and it's all love for those guys over there, but I wanted to kind of do my own thing. And one day I was driving home late at night, it was 10 o'clock or something, and I called Anthony, just because he's obviously somebody who's like pretty connected in the space, and it was like a trusted person for me at the time. And so I called him, said, hey man, I'm not really sure exactly what I want to do. Here's kind of what I'm thinking about. And by the end of the call, we both decided that maybe it made sense to try to launch a research firm together, because I kind of had a bit of a knack for that. We both had distribution. I knew some guys that would make sense to come on board and be part of the analyst team to build out the research team. So 3 days later, we spun up the LLC, and we got to work. The first couple months, couldn't really get anybody on the phone. As you can imagine, we're trying to pitch, like paid research membership seats to investment banks, like when FTX is going down, and everybody's basically, telling us to like kick rocks. So that was an interesting first couple of months. But then, as the market bottomed out 23, things started to pick up a bit. Scaled the business up a bit for a year or so. Kind of got to the point where I wanted to keep pursuing kind of the trading market side, which is like where my interests have continued to shift towards over the years. And after a year, we found somebody to acquire us, called DeFi Technologies. And then after a year staying on board, working with those guys, they were all great. Really enjoyed my time there working with them. But again, kind of got to a similar point where I wanted to try to keep expanding my horizons, keep pursuing kind of the trading market side of things. And so moved into an advisory role kind of after the year mark from us getting acquired, which was earlier this year in February. And then I took kind of a 2-month break, traded my PA, traveled a bit, and then started to look more seriously into kind of what I wanted to do next. I ended up kind of leaning towards the OTC market making side, just because I think as somebody interested in markets, and I've been trading crypto, equities, whatever, from my apartment for several years, I think it's a different level of experience to be like inside of a real institutional grade trading firm. So and also just getting access to different verticals within an organization like that, which is I would say even broader than if you are going to be a junior analyst at like a prop firm or something. So I landed on Key Rock, who I believe is one of the, if not the most regulated, compliant, good actors in the space. Growing very quickly. And as of 2 weeks ago, I just onboarded there and went over to Belgium, where we have our headquarters in Brussels. Spent some time there with the team. Still getting up to speed. It's been about 2 weeks now, so still figuring everything out and getting the ropes here. But I've been tinkering away here, and that's pretty much it, man. And at the same time, I've been trading my PA. Mostly now I'll trade like not BTC anymore, because I just kind of have a core buy and hold position for BTC. But like earlier this year, I had a very large position in Alibaba. On this recent leg up, I would trade in and out of like some BTC calls, or express my views through beta, through memes. It was quite long Doge before this recent leg up from like 18 cents to 22 and a half or whatever it was when I closed that out. And then recently I've been building up a position in being short the long end of the yield curve, which we can get into. So kind of thematic, I would say slightly. I'm never trading like intraday or scalping really, and if I do, it's very small position size. I'll get in and out of something maybe on like over a couple hour basis, but so it's like very size, very small. Generally kind of like more thematic, fundamentals mixed with like executing on the via price action over like a several week time horizon is kind of, I feel like, the sweet spot that I've kind of found for myself.
Great, man. A lot to unpack there. I want to run through
I
a
just
couple.
kind of threw it all out there, and then I figured we could just like.
Yeah, no, that's the way to do it, man. There's a couple of key things I wanted to break down. First of all, congrats on the new role. I didn't want to skip over that because that's obviously super cool. Getting the experience of working in an environment like that is extremely undervalued by a lot of the people on CT. So that's super cool, man. Another thing that stuck with me that I don't really talk about this, but I thought it was funny, so I had to mention it. I had a really similar job to you when I was going to university. I worked at Target. I did the overnight stocking where I would go in at like, I think I showed up at 12 o'clock and I would leave at like 5 or 6 or something like that. And that was one of the shitty jobs I did when I was going to school. One of your points about what you were like listening to podcasts and working on learning while you were at work. That is super, super underrated. Not enough people think like, oh, I don't have enough time, right? That's one of the biggest complaints for people, right? That want to do shit. I just don't have enough time and energy to do it, right? I think bullshit a lot of the time that you have a lot of free time that you just don't really acknowledge, right? And, honestly, like I'm going to be that guy that advocates for steal the company time when you work at a big shitty corporation when you're young and like work on learning anything you can during that period. So I had a corporate job for a few years and it took up a lot of my energy, but whatever leftover energy I had when I was there, I spent, listening to videos, watching, stuff from my friends or whatever, like learning in any way I could to improve my craft. So I think that that's you probably said that and didn't even really think about how valuable it is, but it's actually a really important lesson that people need to hear. Like when you go to your shitty job, especially when you're younger, the jobs are kind of easier from like a requirement standpoint. So you have some of your brain power that you can donate to something else, right? So anyways, I just thought that was really great to
Yeah, and
cover.
I would say though, like I definitely agree, but you got to be interested in it, right? Like you have to like genuinely be interested in it, because for me, and I'm sure you're the same way, it was kind of like my manager was telling me to take my AirPods out, but like I didn't want to take them out because I wanted to keep listening to the stuff because I found it so interesting. So it was like, I'd walk through the aisle with the AirPod in, and then if I saw my manager, I'd take it out.
I did that same shit,
Like
man,
I
but in
was
a
just so
different
obsessed
way.
with it.
That's funny. No, yeah, for me, I thought that was kind of a given to say, like, if you're not motivated or like really interested in the topic, then there's no point in doing it. But I was so obsessed that for me, it was just, yeah, kind of easy.
Yeah.
Yeah, I mean, another thing that you touched on, pretty much everybody in some form or another can relate to kind of the struggles with the family dynamic. Hey, I'm going to go out on a path in life that isn't necessarily considered normal. It'll be more normal as time goes on, but kind of venturing out, maybe not doing this traditional school 9 to 5 route and kind of gambling on yourself is not always socially acceptable. So we talked about that beforehand, before we started the recording, that both of us had pretty similar experiences where, our family, they love and support you, so they really just want the best for you, but they can't always wrap their mind around the risks that you're taking, basically. So if you're listening to this, we all have some version of that story for the most part. And the last thing I wanted to ask you within that, I don't think anybody ever has maybe asked you this one before. I thought it was super interesting. When I first saw your account, you kind of blew up pretty quickly with how many followers you got. So my question for you was just to spitball out, like, what was that like, and how do you think you handled the pressure? Because if you grow, you're automatically going to have people that want to see you fail, right? That want, like, you're going to bring negative energy your way. How did you handle the negative energy? How did you handle balancing out your ego with like I'm this younger guy and all of a sudden all these people want to listen to me? I figured that was a really interesting question to ask you.
Yeah, I don't know if I think I might have been asked that like one other time. I think it's definitely a very strange thing. It kind of happens so quickly that you're kind of just like in it, and then it just kind of is what it is. You're kind of just like thrown into the deep end, proverbially, if you will. I'd be lying if I said that, sometimes people being mean at times like didn't get under my skin, at some points, and now it doesn't really bother me because it's been, I've been on Twitter for 5 years. But at the beginning, 100%, I'm like a 19, 20-year-old dude, and people are saying like foul things to me. You're definitely like, oh man, like that one maybe stung a little bit, but yeah, you just learn to thicken up your skin and keep rolling, man. There's definitely a weird thing in the sense of, I'm just working at Target, like normal college dude, and then all of a sudden, my account runs up and I've got several 100,000 followers by the end of 2021. I think it was there were a couple things, obviously I think people kind of knew me for the on-chain data, but it was especially after the summer of 2021, towards the back end of 21, I did an interview with like Business Insider, and it was like 19-year-old kid talks about why the bull market isn't over, and then I went on with Jason from Blockworks and kind of talked about how I thought we are going to kind of get like a double bubble similar to 2013. I didn't think we were going to like SFP the highs and then go down only, but I kind of thought that was like my general heuristic was this like double bubble. And then towards the back end of July, we started to get, I don't know if you remember this probably, we started to get this setup where BTC started to grind up. And a lot of people say that it was like Alameda bidding down there. I don't know, who knows, but we started to grind up. And then at the same time, funding just kept going more and more negative. And we were grinding up from 30, 31, 32, 33, and funding just kept going more and more negative. And I remember, I was on Twitter just kind of calling out like, hey, I think we're in for, a giant short squeeze. And then I think we had the biggest short liquidation event. Maybe, I don't know, we might have bigger ones outright in nominal terms now because BTC is like 3 times the size it was then. But, we had this crazy wick up on Binance to like mid 40,000s or something like that. Candidly, like didn't make as much money on that as I maybe could have. But, definitely from like a public perception perspective, people are like, oh, maybe this kid's like somewhat worth listening to. I'm wrong all the time, but it was just like this happened to be like a decent call, I think. And then from there, the account really started to grow. And I would say like, the peak growth of the account was definitely in the back half of 2021. There were months where I was doing like 150,000 followers a month. And it was definitely super crazy during that time period. Cause it's just, and I feel blessed to be in that position and have the Twitter account to this day, to be able to leverage it for opportunities. And I don't want to say leverage because that's kind of like a negative word, I guess, but be able to utilize it for opportunities, for myself and help my friends out as well. But all of a sudden you're like, okay, kind of the world opens up if you're saying, okay, hey, I could utilize this distribution and do this, I could do this, I could launch a business, all these things. And yeah, the other piece, definitely like helping friends out as well. One thing that I really am proud of at Reflexivity was at the beginning we had a really, really great analyst team. It was myself. I was writing some of the reports, but I was by far not the smartest person. My buddy Felix Jalvin, who is now running the Forward Guidance podcast. He did kind of a lot of our in-house, like macro reporting and analysis. Noah, who I believe is now mostly active, Barachain. But he's bounced around, worked at a couple great places as well, and has a great reputation. Also my good friend Seth Steinman as well. He was an early member of the team. All these guys, and I must say I'm especially proud of Felix. Not that like he needs my regards or something, because he was going to crush it regardless. But it was really cool to see him really take off. And again, he would have done it anyway. But I'd like to think that maybe I had some like minor part in helping like shine light on what he was doing. And anybody that my friend launched a startup 2 days ago. And, I'm able to shout him out. I don't know if that really is going to help a ton, but like if it helps get a couple new clients, then like, I'm happy to do whatever I can. So it's cool because I think early on, I had, Anthony, Preston Pisher, I haven't talked to in a while, but, he kind of, shouted me out early on, a couple other guys as well. I even remember this guy, Alone, from this website called BitRoar. And I would still remember to this day, it was like I had like 1,000 followers, and he would like commission me to write these little articles on the website. And you remember these things, now that the account is so large, and I if I can do that in any way, and help shine some light on like what other people are doing, and what they're working on. I think it's a blessing to be able to do that. So I still try to carry that to this day, and utilize the Twitter account, not just obviously for my own benefit, but if I can, help out my friends as well.
Yeah, that's a great mindset to have with it. I've got to stop and say shout out to Felix too, because I really like the guy. I similar story, right, where I actually taught him some stuff. He was one of my students, and I'm not gonna, just like you said, I'm not taking anything away from him because he was gonna do what he was gonna do with or without me. But it is cool when you have that kind of moment where it's like, yeah, maybe I had like a 1%, 2% impact, like helping this guy or whatever. So yeah,
it's cool when you're genuinely excited to see somebody crush it.
Oh, for sure. Well, I think the longer you do this stuff too, the less of kind of some of the senses of jealousy, because that's definitely embedded in a lot of us. That you see somebody win, and the immature, weaker part of you thinks, "Damn, that should have been me," right? Like, that it doesn't matter how great of a person you are. All of us struggle with that and kind of stuff in some form. So I think that like kind of the longer you do this stuff, easier it is to let go of that, especially as you have your own wins, and it's like then you see your boys catch some wins, and it's just like, yeah, I mean, I really like that you worded like valuing your account in that way of like the support for the homies kind of argument, because you probably don't realize that like they really appreciate that. I mean, but you worded it like, I don't know if it's really gonna help them. Even if it doesn't, it probably gives them like confidence boost and all that kind of stuff too. So I think that's great, man.
Appreciate that.
Let's move over into slightly nerdier stuff, ever so slightly. I kind of want to yap about Bitcoin macro. So keep it, as whatever path you want to take it for, however you want to talk about it. What are your kind of thoughts? About what's going to happen. Regardless, you could talk about it from like a 3-month perspective, or you could talk about 3-year, perspective. However you want to run with it.
Yeah, I'm a Bitcoin maxi at heart, and have been for 5 years or so now. I'm very much in the camp of Bitcoin's going to eat into the monetary premium of everything. We like to meme, the BTC against gold kind of thing, but I think the real asset class that Bitcoin is going after is the sovereign debt market, and I think we're at an interesting spot for both of those things, and partially because I would say they're now pretty intertwined. Zooming out, my thesis is that Bitcoin is hedged against monetary debasement. Not saying anything particularly new here. The debt situation in the United States unsustainable. Because of that, you hold Bitcoin to hedge yourself against the monetary debasement that's required to service our debt in nominal terms, because we have to print our way out of it. In the last couple months, my views obviously have evolved as we've seen these like crazy shifts in the policy coming out of DC. Going back to February, I got probably the most bearish I had publicly been, basically because everything that Trump was doing was basically trying to do something about the fiscal situation, and all these things were going to create drag on the economy. So slowing immigration, trying to cut spending, the kind of Doge efforts. Meanwhile, you juxtapose that with record high valuations in equities, and equities pricing everything for perfection. So I felt like that was like a relatively asymmetric kind of setup for downside and risk, and BTC coinciding with that. We obviously, traded down quicker than I thought we would. I ended up buying, and I kind of offloaded basically everything except for like my core Bitcoin holdings during that time. And then, we traded down 70s. I actually bought back. I went on a trip to Japan, and I came back from Japan. It was the day before we bottomed, which was kind of ironic. But then the day I got back to my desk, I was like, okay, maybe this is maybe this is the bottom here. So I ended up buying back the day of the low. I bought 2 days later, but then I didn't hold it all the way up. So, I didn't, and I'm not gonna say I sized all the way into the bottom either. Didn't buy as much as I thought because, I was definitely, I don't want to say off sides because it wasn't short, but, I wasn't like as balls long as maybe I would have wanted to be because I just didn't think we were going to rip up in a straight line like we did. So, I had taken some off, along the way. I'd kind of relong, caught like the 90 to 95. I caught, the lows to like mid to upper 80s, on like some calls and some beta as well. This recent move up BTC from like 100 to, whatever, 105, 106 or whatever it was. I was long like Doge, Bonk, and XRP, and Doge performed the best out of those. I think actually your post maybe like subconsciously guided me towards that. I think that might have been what like put Doge on my watch list. But I've been kind of in and out of longs on this move up, but definitely didn't expect as aggressive of a move up with no dips at all, and didn't size. I'm not gonna LARP, like I sized into the lows as much as I would have wanted to. But now just like looking at the market in front of you, we're definitely at a very interesting spot where I do feel like the market's kind of in this position now where you're right up against all-time highs. It's are we putting in this like super aggressive dead cat bounce, bear market rally, or are we about to just blast through all-time highs? I think it always seems like obvious in hindsight which of the two it is, but that's kind of the decision that you have to make. A couple factors that I'm thinking through as it pertains to like maybe how I want to think about positioning from here. Obviously, a lot of the trade stuff has gotten walked back. We've seen some resolution there, especially with the U.S. and China, which is kind of like best case scenario. That being said, I think the situation for the economy is still worse off than it was, at these same levels, at these same multiples earlier this year. So I find it difficult to think that equities are just going to keep going up in a straight line from here. As it pertains to Bitcoin, though, I think we may finally be in this regime where BTC isn't fully correlated to equities, and this recent drawdown was the first time I think that you could actually say that happened. We've always memed about the decoupling, but equities trading off as aggressively as they did, from Liberation Day, and BTC, not breaking prior all-time highs and holding 75K, I think is a sign of tremendous strength, relative strength for BTC. I think years ago we would have been down 40%, maybe 50% on BTC. And I think a lot of allocators are probably taking note of that. My strongest conviction kind of idea or theme at the moment, there's some other things like robotics. I've been trying to pay attention to. I just listened to this podcast with Citrini last week on Felix's on forward guidance, which I think is really good. Like that might be a theme that takes off, but that's not like my wheelhouse. It's not like building like thematic like equity positions, although I'm generally bullish on robotics. Those things might do very well. In terms of like the things that I feel like I can kind of wrap my head around, I feel like my highest conviction view right now, and my buddy Quinn Thompson, who I'm an LP in his fund, kind of helped formulate my kind of thoughts here, is that the long end will keep blowing out over the next couple of years. We just had Donald Trump try to reverse the fiscal situation, and if anybody was going to be able to do it, and have the balls to do it, I think it would have been Trump. And he got forced to walk that back within a week. And I think that's that maybe has something to do with why Moody's downgraded U.S. credit rating, because now I think it's the we're in full blown Ponzi mode in the U.S. now. It's it's obvious that no politician is gonna cut spending. I think Doge will keep cutting, like, government malpractice, people taking advantage of like proximity to the government, like borderline corruption and all these things, but there's not going to be meaningful cuts to government spending. And now you have Besson coming out and saying, oh, we're going to grow our way out of it. So now they've completely shifted the rhetoric of how they're going to take on the issue. Before it was, oh, we're going to cut spending. Maybe we're going to try to also juice the private sector in the long term. But now it's just purely, oh, we're gonna grow our way out of it. So to me, I think the setup for yields, I just think is very skewed towards them continuing to blow out. There's some levers that the government can temporarily pull, like if they do like the SLR exemptions, so basically like the leverage ratio for banks to hold treasuries. Maybe if they're able to, if deregulation really juices the economy, that can fix, kind of the, debt to GDP a bit. But I think that's like a longer term thing. That's not necessarily like, 6 to 12 months. So I think the setup for higher yields is very much skewed towards more upside here. And the interesting part to tie back into BTC is what's the dynamic, or I guess broader risk assets as well. Like what does that mean for other assets? Because historically, higher yields lead to lower asset prices, especially equities, because the discount rate, which is the risk premium that you need to put on a stock that you want to hold, is higher when the risk-free rate is higher. So, if the 10-year treasury is 4.5%, but I think, Apple is going to perform, is going to do 4.5%, it's going to return me 4.5% this year, there's no risk premium that I'm getting for taking the extra risk of owning an equity as opposed to a government bond. That's, guaranteed by the whole faith of the U.S. government to be paid back in nominal terms. But as yields go higher, the risk premium that you need to be long an equity is greater. Why would I still think Apple is going to go up 4.5% this year, and now the 10 years gone from 4.5% to 5%? Well, I'm going to sell my stocks and I'm going to buy the bond, because from a risk adjusted perspective, not only is the outright return higher, but on a risk adjusted basis, it also makes more sense to get out of the equity position. But that being said, I think we're in this weird, wonky, like backwards world because of the debt to GDP situation, the whole like nothing stops this train thing, where I don't think it's like completely out of the cards, and this is why I'm like not short equities, and I'd rather just be short the long end of the yield curve. Because if we're continuing to pump money into the economy and financial markets through excess fiscal spending, and as liquidity's coming into the market, as yields are blowing out because of those things, I think you could be in a scenario maybe where equities do go up and yields keep going higher as well. And maybe same for BTC, where BTC, and in that scenario, BTC is basically finally performing as kind of a hedge against the sovereign debt market, because as sovereign debt market's selling off, BTC's doing well too. But that being said, again, I'm more convicted in just the long end blowing out than the mental gymnastics around the equity component to it. So right now, the way that I'm positioned from here is I have my core Bitcoin position. I never sell that. I want to pass it on to my grandkids one day. I have some dry powder. that I've gotten T-bills, and then I've been building up this short the long end position. And I've basically been doing that through buying out of the money, early Jan 26 out to, I'll probably keep adding towards middle of 26 puts on TLT because it's pretty liquid options market. I think for the TA guys and obviously the two of us are both chart guys. Like if you could just throw up, I don't know if you're able to screen share or whatever, but I guess people could look it up for themselves too. If you just look at TLT and then like invert it, and then ask yourself if that was for all the crypto guys listening, like if that was a shit coin, would you be long that? I think the answer is probably yes.
I didn't realize when you were posting that on Twitter that it was inverted. I just pulled it up for them. Okay. Yeah. Right on. Okay, so probably off stream at some point I'm gonna definitely be hitting your DMs to talk about some fixed income stuff. I want to pick your mind about that. Just some random yap. One of the first things you said was about you slowly becoming, or you basically were a Bitcoin maxi from the beginning, and I did very much not that path at all, where I came in because of ETH. And I always thought Bitcoin was cool, right? But it didn't appeal to me the same way because it's basically just a piece of, it's a rock that I can send back and forth against the blockchain. There's no like programmable nature of it. Yeah. So it basically took a long time of trading, and there's moments where you're forced to be a Bitcoin maxi back in the day because we traded all these Bitcoin pairs where you had to, everything was about how much Bitcoin you had and am I beating, am I outpacing Bitcoin right now, right? So you basically were forced to be a Bitcoin maxi way back in the day, which was interesting. But yeah, what I'm trying to arrive at is eventually, as I traded these markets longer and longer, you just arrive naturally at the conclusion that there's no long-term value proposition in anything but Bitcoin, and that the only thing you should really look to try to hold on to, right? Like everything else you should be almost quick to let go of when the opportunity comes. And Bitcoin, you almost want to be like hesitant, like, do I really want to sell my Bitcoin right now, right? And I'm not as committed as you, where I don't want to never sell my Bitcoin. I only want to sell my Bitcoin like once per cycle, basically, instead of I don't want to like sell just because I think it's going to go down 30%. I don't really care. I'd rather play defense and just try to mitigate that drawdown and not deal with the tax implications of, buying and selling my shit. So,
yeah, I'd like to make 2 points. And one I forgot to make when I was just rambling and was talking about the Bitcoin specific views. I think you just said something that's really interesting that like myself and like some of the newer people in the space don't really think about. Of Bitcoin used to be the trading pair for all the alts. So like you said, you used to have to be a Bitcoin maxi. And also you used to have a tremendous wealth effect that directly would spill over into alts, because BTC would rip. And then all of a sudden, you had this trading pair asset to just rotate right back into. And, it was all crypto natives trading, and that capital would flow right out into alts. You'd get the dispersion of the capital out, the core asset, it can no longer be supported, and the whole thing implodes. But now I think with the ETF, the types of buyers of BTC are completely different. It's now, sovereign wealth funds, pension funds, whoever that are gonna. I don't think pension funds are like buying in size now, but will. It's a whole different heuristic of individuals buying in a brokerage account, as well as in the treasury companies, which is the second point I was going to make in a second. So I just don't think that we have that same wealth effect on BTC that we used to. That you get that rotation into alts. Some stuff gets dragged up through correlation, and just because like retail sees BTC go up, so they want to get long crypto. But we've seen this over the last couple of years. It's hard to like make an argument against this. It's much more segmented, selective things that end up going up, and I do think we're entering an area where like the fundamentals do matter and cash flows and all that stuff. But the second point I was going to make, which I forgot to make when we were talking about BTC, I think part of this leg up recently has definitely been short covering people offloaded, some of their BTC and then, bought back on the way up, and also equities dragging BTC up through correlation, as well as people coming to the conclusion that we've come to this like hyper ponzification of the US because of what we talked about. But I do think a large part of it, a sizable chunk of this leg up, has been these BTC treasury companies. And I want to be careful in, like, I guess how I word this, but I do think that there's a lot of hidden leverage there. Last cycle, and I don't want to compare Bitcoin treasury companies to the lending platforms of last cycle, because it's different, and like the MicroStrategy people are going to come at me, even though I've been long MicroStrategy at certain points, and I've been a backer of Saylor for years. At the end of 2022, Reflexivity put out a research piece with Blockworks saying how MicroStrategy wasn't going to go bust and he was going to be just fine when everybody was dunking on him. So like I love Saylor. I think he's a financial engineering genius. But basically now you've got all these copycats of MicroStrategy that have come out, and they say, hey, we're going to go out and raise money, and then we're going to hit the public market, and we should be at this premium to the net asset value of the underlying Bitcoin because that's what MicroStrategy trades at, and that's what the other treasury companies are trading at. And I get the whole it should have a multiple because the BTC per share. But at the end of the day, I mean, you even had like David Bailey, who, again, not targeting anybody. He's done a lot for Bitcoin, and Bitcoin Magazine's great. I actually interned at Bitcoin Magazine when I was 18. But he said on recording, he said, well, if the premium to NAV goes negative, we're just going to sell the BTC and buy shares. Why wouldn't we do that? So it does bring analogs. And again, I'm going to get people that are like, oh, it's different. It does bring analogs to like when the GBTC premium flipped negative in 2021. In hindsight, that was kind of when the beginning of the end, once that flipped negative, because that was a very large buyer that fueled us up. And I think over the last 2 months, a tremendous amount of the buying has been these BTC treasury companies. And so if you've got for every new Bitcoin treasury company that comes in, you're diluting the flows. At the beginning it's just MicroStrategy, and as somebody who I like to express my views through MicroStrategy at times on BTC. I very rarely actually trade BTC itself. MicroStrategy is the deepest options market in the world. Why would I buy this other thing that's not very liquid, maybe has beta to Bitcoin, but maybe not very liquid, when I could just buy calls and buy upside on MSTR, which is levered BTC, so I can buy levered BTC if I wanted to get beta, as opposed to buy this other treasury company. And I think as you've got more of them coming out, you've got more assets that are competing for the same inflows into this overall pool of treasury companies. And then that's going to be what over time, maybe it doesn't go negative, I don't know, but it'll bring down the premium to NAV on a lot of these firms. So I'm rooting for them all. Again, I like Saylor a lot. There's like Metaplanet I like a lot. My friend Dylan LeClaire is like heading the Bitcoin treasury strategy there, and I want these guys to all succeed. But I do think that these treasury companies have been a huge buyer of BTC over the last couple months, and you look at open interest on perps on BTC, and you could say, oh, it doesn't really look like there's a lot of leverage here, but a lot of the leverage is, in my opinion, hidden in. I mean, it's not necessarily fully hidden because these are all publicly traded companies, but it's hidden in these Bitcoin treasury companies.
Yeah, a lot to touch on there. I was actually just talking about this exact thing on my stream earlier today. Basically how I worded it was, if you traded Bitcoin for a long time, way back in the day when I was getting into it, this was a derivative-led market, right? Pretty much all of the up and down, for the most part, obviously there's spot moves, right? You know, when somebody pukes a whole bunch or buys a whole bunch, right? Obviously, but the majority of moves were just somebody getting squeezed out on BitMEX. That was honestly a lot of the moves. And as time has gone on, we've slowly shifted more and more to a spot denominated market, right? And I would say that shift really happened for me at the start of 2023 is when I started to notice that price action became far more structured and less predatory. The OG days of trading Bitcoin were, I gotta buy the sweep, right? I can't enter if I'm not entering off of somebody else's stop loss. Because if you didn't trade like that, you were the stop, right? But now we don't move that way anymore. So it's been really rough for a lot of people to adapt, and everybody gets caught up on, like, you know, open interest, for example. And if you look at OI over the past few days, every time we try to break out, it's because OI is rinsing, you know, going up, and then they get smacked down, and, you know, all those longs get stopped out. So open interest still matters, but it's just not like the primary driving force at all. So I don't talk to some of the same kind of people that you do. I talk to much more, like, you know, crypto native people, and you're talking to more professional people than me. So we have different lenses on this for sure. But that's been my gut feeling for a long time, is that, like, what's driving these markets is, I almost call it like an arms race, where it's like these people are sprinting to accumulate Bitcoin is what it feels like. And they can only do it so fast, right? Because as you know, like, these organizations, they're required to move slow, right? I mean, there's like all these rules and, you know, all this stuff in the way. So anyways, that's pretty interesting. I had a couple other things to say. You mentioned the equity correlation. That's been really interesting with this bottom, because I've traded Bitcoin for long enough to where I know that whenever people talk about Bitcoin relative strength, you immediately clown them, because 99 times out of 100 throughout history, every time somebody says, okay, Bitcoin's strong, it just nukes right afterwards, right? That's how it always played. This is the one time where that kind of didn't really play out, where we sold off like 30%, something like that. So it was a healthy pullback for, you know, liquid asset, but nothing crazy, right? Like, we've seen 50% pullbacks, right? 60%. So yeah, just pretty interesting. I even made fun of it. I was positioning bullishly the whole time, like wanting to be long, but still making fun of the people that were saying that. And I'll take the L on that. This was the rare instance where the relative strengthers ended up being kind of right. And you know what? Honestly, all that comes back to what you were just saying, right? Who's buying Bitcoin? These people don't really do these people that are managing all this money, do they care if they're buying Bitcoin at 88K or at 96K in the grand scheme of things? Does it really matter? So at least with like the sailors, right? Like, he clearly seems, when you look at his disclosures, he almost like wants to buy higher to like help lift the price up, is almost what the feeling has been.
100%. I mean, if I was sailor, I would try to opportunistically buy, you know, during times where I could kind of help BTC show some relative strength and try to draw some other buyers in as well. So yeah, I 100% agree, man. But I'm with you. Like, the relative strength, you know, on this recent drawdown, like, wasn't a meme. You know, it was very real. And you know, I think that was a hint to BTC, perhaps, you know, in hindsight's always 2020, but hinted at BTC, you know, slingshotting back up. So yeah, I mean, I'm in the camp that, you know, over the next couple of years, I think BTC trades in the hundreds of thousands per coin, and that's largely just, you know, due to the same thesis of why I'm short the long end right now. And I think those things kind of go hand in hand. Equities, you know, I think it's like less clear, but, you know, BTC has no earnings. It's just a pure liquidity spigot, and I think now it's been further reinforced as a hedge against, you know, kind of the U.S. debt situation. So yeah, man, we're at a very interesting time, you know, in financial markets, and you know, it does always make you go back to this, you know, idea of like BTC just being almost this like divine type of, not to get like too woo woo, you know, but like the timing of when BTC was launched relative to the, you know, the foresight of Satoshi, and, you know, the timeline in which, you know, the issues brought on by, you know, the response to 2008, moral hazard, all these things in financial markets and BTC, you know, it really is incredible, because BTC's, you know, over the last 2 years, finally got that stamp of approval from Larry Fink and co. You know, meanwhile, at the same time, you know, a lot of the issues, I feel like, have only accelerated.
Yeah, totally. I mean, for me, I kind of gave it my own personal stamp long ago. But you're right. Like watching that societal shift to where like the older people in your family nowadays are probably like, all right, Bitcoin's probably okay. Where for a long time they were just like, no, that thing's a scam, right? So been crazy to see that shift. I wanted to talk about the lows that we went through because that was also something you mentioned. If you participated in buying the lows on this recent down move, it was really difficult. I think the only reason why I was able to participate is because I had pre-planned it. But if you think about it, right, like we did not know what the fuck was going to happen, right? The whole tariff situation could have gone either way for us, where it could have like
Yeah.
Bitcoin could have just nuked down to 50K, or we could do what we just did, where we V'd back up. So I think out of all the bottoms that I've ever participated in, this one was for sure the hardest. I think that for this, a lot of it probably plays it into the social side of things. I told everybody what my plan was, so I told like, imagine how embarrassed I'm going to be if I told everybody the plan. The plan plays out perfectly, and then I just don't take the trade because I was scared. So that
Yeah.
actually played a big role. It's kind of random, but when we're talking about some of like the
Public
social
stuff goes
stuff,
both ways, right? It
yeah, of course, of
it's
course. When
it's
you're
bad.
wrong, it's
Yeah,
obviously
yeah.
the opposite. But I'm
No,
super
but
lucky
I'm seeing
that
more so in like executing. I think like executing things to your point that you're making right now. Like sometimes it goes the other way of like maybe you get into a trade, you tweet out that you're long something, and then you feel stupid like tweeting the next day that you're out of it. And there's definitely been like I don't know about maybe you're you don't care, but like for me, there's definitely been times where like that wasn't like the sole driver of my decision making, but it definitely like played a role. Definitely like and that shouldn't be part of your decision making as somebody allocating capital. Like it should be, hey, I tweeted this, and so like I don't want to change my mind quickly. Like you should just be objectively like looking up the information. So yeah, it definitely goes both ways.
yeah, I hear you. I would say that the that's a large reason why I don't share as much. Like I used to be very open on my Twitter. If anybody scrolls really far back, you'll see like almost too open, like sharing sizing and everything, right? And over time, I just kind of realized that like I've already kind of proven myself to many of my peers, and that's ultimately who you care about proving yourself to, anyways. So I don't really care about the random people on Twitter thinking I'm a bad trader anymore. So I share my plans, and if I'm right or wrong, I'm really not gonna lose too much sleep. Normally, when I'm wrong too, I normally like have follow ups where I tell people like, "Hey, I was wrong. This is how we shifted, and this is the new plan," kind of thing. So. Um, I think that it really cuts both ways. There's a lot of positives and negatives if you really try to like game it all out. I think that in some ways it keeps me more focused because I'm a little bit worried about like what if I lose my sauce. Like I think I've traded pretty decently for the past few years. So like what if like I like am lazy for a few months and then I can't make it back. So there's like almost like it depends on the person, right? That could be a very negative pressure for some people, but for me, I kind of like that. Like we were talking earlier, like I had to like make motivating forces for myself in life to like want to push forward, because there's this quote that somebody shared with me a long time. Dude was a fighter way back in the day, and he said it's hard to wake up at 5 a.m. to train when you're sleeping in silk sheets, right? The more progress you make in life, the harder it is to motivate yourself to like do that next step. So I basically just like make things up in my head almost as a like driving force a lot of the time.
I think there's also maybe and this was something for me was I had such a strange and still do have such a kind of strange path that there's definitely some like imposter syndrome stuff there, and some of it's like definitely proving things out to myself. I've done well enough over the last few years that like I don't necessarily need to worry about like where food where I'm gonna put a meal on the table, but it's definitely like, well, can I really go to institutional grade trading firm and help scale things up, or make an impact there? Can I really run my book up from this to this? All these things. So yeah, it's you gotta find that thing internally. I'm curious what your thoughts. I'm staring at the 15-minute candles while we're jamming here. I'm curious what you think about BTC here. I mean, we we've tested this like 106.5 level like 4 times now, and here we are once again. I mean, crazy volatility over the last few days. We had like that run up, then we SFP'd the highs, came all the way back down, SFP'd the highs again, and then sold off today, and now here we are again. But OI has just been going nuts over the last couple days. So it seems like somebody maybe I haven't been looking at I'm just looking at OI, but I don't know if it's like there's somebody underlying, bidding BTC super aggressively, but you're definitely seeing perps keep coming back in to try to buy the breakout. Like over the last 2 hours, we've got about 10,000 BTC that have been added to aggregated OI, or at least on Velo. And since, what is this? Today's the 20th. I mean, over the last 2 days, we've got, almost 20,000 BTC that have been added in total. So it seems to me like these are longs that have been piling in pretty aggressively here, but curious what you think.
I have a lot I could probably say here. First off, I'll say I'm just super bullish. I'm long across the board, right? So I'm like fully long Bitcoin, fully long on some alts, and I'm derivative long from yesterday on Bitcoin and Solana. Basically, so the level you're talking about is like 106. If you look at order books, like the spot book is very, very skewed on this side. So every time we come up in here, there's just a lot of ass liquidity that's not preventing us to trade through. You get the dumb perps that ape into it. Once the dumb perps start to unwind, that's why we go down so fast, right? Because there's no, anyways, like there's no follow through it. So my main plan with the asks is that the asks are, a lot of the times you'll see this where if you go back and look at any of our historical higher time frame ranges, there's almost always a lot of ass liquidity that sits on top of the range. And it really is as simple as it's preventing the bit from trading up, right? It really is like the asks sit up there. Some people probably have true intent to sell, but I think also a lot of those asks, normally their purpose is to help accumulate, into the lower parts of the range. So that's what my gut feeling is with a lot of the ask liquidity. Talking about some of the open interest shit, you said, like there's been some wild open interest moves, a lot of aggressive perp chasing. I think a lot of that's from Hyperliquid, because I'm looking at Binance right now, and Binance really unwinds their OI pretty quickly. One of the sketchy things that's been going on in this move is that basically since the bottom, since like 75K, Binance perpetuals have been doing things that maybe they shouldn't be doing. A lot of spoofing and a lot of, of their games that they play. So if you look the whole way through, Binance perps has been extremely supportive of the uptrend, so that's the perp side that is is leading us up. There's a lot of spot buying like we talked about earlier, so it's the combination of a lot of legitimate spot buying coming in with Binance playing the games that they play. And you might think like, oh, that's a lot of Binance playing crazy stuff. Like, what if that's they're not really like a risk to us going down, because like it's almost like whoever plays these whale games on Binance just has infinite capital. Like I've never seen these people exhaust themselves. I've seen, astronomical numbers build up over time. So that's basically where I'm at, right? I think that it's a matter of when are we going to break through this level? Maybe we get rejected right now. Maybe we send it to an all-time high right now on the recording. Who knows? You just gotta be patient with this shit.
You might just blast through here.
It's just patience, though. All this is just like I'm pre-positioned on all of it, and now you just chill. I just wait for everybody else to get whipsawed around in the meantime, and I'm just gonna chill, And if I get I have a couple of plans for what it will look like if I'm wrong, to be clear too. And if I'm wrong, I'd immediately first thing would cut off all the leverage, long positions. Maybe look to short Bitcoin to play defense, but right now I don't see any warning signs flashing. It looks like we're gonna trade up eventually right now.
Yeah.
Cool. So I think that we'll probably go ahead and wrap it up there. Thanks, man, for coming on. Great chat. I think we covered a lot of topics. We didn't cover everything we wanted to, so we'll probably have to do a little bit of a follow-up to this at some point. But yeah, thanks, man. Appreciate it.
Yeah, thanks a ton for having me on. This was awesome. I'm definitely down to come on again because, I think we only hit on like 2 out of the 5 or 6 that we wanted to get to. So I guess I'll see you in the next one.
All right, man. Appreciate it. Have a good one.
You too.
Big shout out to Will for coming on. Had a great conversation before we started the recording, actually. So it's really great to touch base on with him. Hadn't chatted in a couple of years like that, so that was great. If you enjoyed that and if you want to see more guests come on, please let me know in the comments. But yeah, honestly, thanks to Will for coming on. Great chat. Cheers, everybody.